Good morning, everyone. Hold on a second here. Welcome to our Friday morning trading room. Sorry I couldn't make the trading room yesterday. In fact, I ended up getting home quite late last night. I'm surprised I was able to even drag myself out of bed this morning. Today, we are going to do our first Rabbit Hole Friday. Now, with the short notice and everything, I didn't get a chance to set anybody up, so you're going to have to make do with me. I thought maybe what we would do, and for those of you who weren't around when we were discussing the possibility of doing Rabbit Hole Fridays, because Fridays can be a little bit wonky kind of trading days, is we're going to take a look at different indicators, maybe interview some traders in the room, and just, kind of get other people's perspectives on how they trade, how they use the system. So today I thought we would go over an indicator. And the indicator I thought we would take a look at is MACD, and how, maybe you can tie in MACD to make your system a little better. I don't really want to say that because that kind of implies that your system isn't complete the way it is. It is complete the way it is, but hey, people can't resist tweaking. So let's go find MACD. And I was going to show you the indicator warehouse MACD. I don't think I have it loaded on here, but I'll show you where you can find it on the website. No, I don't have it. So we'll just go with the traditional MACD. Now there's loads of information about MACD on the internet. Okay, that should work. There's loads of information about MACD on the internet if you want to, learn all about it. I've just closed up the filter there a little bit. There we go. So MACD is, it's actually a very sophisticated indicator. It's a very reliable indicator because it shows you what happened in the past. So that's the problem with most indicators, is they show you what has happened before. And to try to use them in a predictive value can sometimes be a little bit difficult. What MACD is, it was actually developed, I guess, about 50 years ago now. Well, look at that. Yes, it was 50 years ago. George Appel developed MACD, and what he did was, instead of following just one moving average, he plotted the difference between two moving averages. And that difference is plotted as your MACD. MACD stands for moving average convergence and divergence. So as your two moving average lines would get closer together, your MACD would get smaller. And as your two moving average lines got broader, your MACD would get wider. He also decided to throw in what's called a trigger line. That's this red line that you see going back and forth here. And the notion is that when the MACD crosses the trigger line, that gives you a buy or sell signal. Now, MACD is another one of these systems where you can be always in the market. So when MACD crosses to the short side, you start to sell. When it crosses to the long side, you start to buy. As you can see, that can sometimes give you a few too many signals, and you can kind of end up in a little bit of trouble. But let me show you some of the ways that I like to use MACD, and we'll go on from there. Yeah, Anthony, these are the NinjaTrader 8 charts. So that's why the look is a little bit different. A Ninja 8, big cosmetic upgrade from NinjaTrader. All right, so let's just take a look here at a couple of instances of how you can use MACD. Like I said, one of the big deals about MACD is when MACD crosses your here, let's change the color of that. I forget what I made the other ones. Okay, bear with me here a sec. Here we go. That's a little better. Okay. So one of the big deals with MACD is that when MACD crosses your trigger line, you're going to notice that these crossovers occur the same time that the MACD histogram, which is also the same kind of idea, crosses what's called the zero line. So this histogram, these bars underneath here, show you the same thing as the lines do, but in a slightly different fashion. So I'll leave it up to you which you find more palatable, but that's what we have going on here with MACD. What I like about MACD is I like to use it more as a confirmation tool because it kind of shows you in a way what the momentum is doing. So if you're following MACD, like I said, I think it's more important that you use it as a confirmation rather than a leading tool. So here we have MACD cross and it becomes bullish. And shortly after that, the Raptor, and I'm just going to pick on the Raptor here today, you can apply these to any of the DTS signals, the Hawk, the Falcon, the Eagle. But just for simplicity's sake, I'm going to start with the Raptor, and if time permits, we'll go into some of the other birds. But here we have the MACD crossing, and shortly afterwards, we have a number 2 signal, and you can see that with that MACD cross, it may have added a little bit of confidence to taking this number 2 signal. So in that sense, it could potentially be very helpful. Likewise, when MACD crosses back here, now I could be on the alert for a sell signal. This signal right here, one second. Was it going to let me? No. All right. Okay, this signal right here is not, hold on a second here, folks. I got to do a bit of a shortcut. Let's see if that worked. Yay. Okay, this signal right here, even though it didn't print as a number 3 signal, is still a number 3 signal. And you can see the MACD crossed, it started to get a little bit more bearish. Well, then I'm on the alert now for a selling opportunity. Let's take a look what else we can find. I think what you're going to find too is that when, as with most market conditions, when things are very overbought or oversold, and MACD is going to be a relative value. You're not going to be able to spot that easily. You're going to be looking at your MACD chart relative to where it has been. And you're going to say, ooh, that's very deep. Maybe the market may become oversold at this point, and we can kind of look for a buying opportunity. Well, here the MACD crosses again, and so once I get a handle on my tools here, you could be on the alert for a buying opportunity. Now you can see this buying opportunity did eventually work out. You did take some heat on the trade, which just reinforces the importance of not keeping your stops too terribly tight. And just a couple more examples, and then I'll show you another attribute of MACD. And you can see here, again, a fairly decent confirmation of the number one signal, these developing very, very close together. So those periods when you see the market kind of blah, kind of sideways, and you're wondering which way is the market leaning? Well, maybe following MACD will clear things up for you a little bit. So here, you know, the market's kind of in a bit of a sideways chop. Well, at this point, MACD starts to look a little bit more bullish, and so you may be open to a reversal signal. Pretty cool, huh? All right. Another feature of MACD, which is true for all oscillating type indicators, oscillators simply means that they go back and forth, is that you can sometimes it will show you divergence. Now, divergence is what happens when the indicator goes one way and price goes another. So here we have some divergence. Price is going down, the indicator is going up. Why is that significant? Well, it's significant because usually the indicator wins. Not always, though. That's the tricky part. But usually the indicator wins. See, here's an instance where there's divergence. Price went up, the indicator went down, and yet price still went up. So you need to be careful. I don't usually put too much weight on divergence, but if I get other evidence that the trend may be ending or that the market may be reversing, I will pay attention to that. So sometimes you'll get double divergence in a longer downtrend. You may get instances where you know, you're comparing price points from the indicator. Well, we don't really have double divergence here, but sometimes when you follow it, you'll see that you'll have two instances where prices will be going down, the indicator will be going up. So after that second one, I tend to give it a little bit more credence than off the first one alone. Another interesting tidbit, while I think of it, is that you're going to find your indicators, like your MACD, are going to be a little bit more responsive when you're using your indicator warehouse mean Renko bars. That was one of the features of employing the mean Renko bars, is they have a bit of a smoothing effect on indicators because the data is compiled a little bit differently, the bars are presented a little bit differently. It tends to make the indicator a little bit more responsive versus a time-based chart or a tick-based chart. All right, so there's just a little fun fact for you. Yeah, like Mark says, love the mean wrinkles. So do I. Mark also has yeah, Mark says MACD helps show when momentum may be getting ready to shift. Momentum will change before the new trend develops. This presents opportunities before engaging environments or oscillating market environments. Yeah, which is exactly true. So like this instance that we saw right down here, the MACD kind of suggesting already that maybe we're going to be looking at a reverse. Then the MACD crosses and the market starts to get a little bit more bullish from there. All right. Here's a little MACD observation from Anthony. Anthony says the 0 point in the MACD means if the trend shows below the 0 point, everything is in a downtrend and vice versa. Yeah, so as I mentioned before, the histogram, which are the bars that you see here, they show you where the MACD crosses occur in a different format. So when your MACD lines cross, that's when your histogram goes over the 0 line or below the 0 line. It's a little bit easier to spot things like divergence on the histogram, which I suppose is why traders began employing it. It's a little bit easier to pick out than it is on the MACD itself. The indicator warehouse MACD suite, it's called. Hold on a second here. I will get it for you. Well, okay, it's at it's at the website. I'll have to find it for you later. But it will show you things like divergence, and it will alert you to the crossovers on your chart as well. Yeah, Frank, I agree 100% with Frank's comment here. He says mean wrinkles are the way to go. Just use the price movement for indicator calculation. It takes time out of the equation from the chart, and that is a huge, huge benefit, I think, for your charting program. Okay, so here again, you can see this morning, nice little cross here on the MACD, and now we can start to look for a sell signal, whether it be the Falcon, the Eagle, the Hawk, and here also comes our confirmation. Besides showing divergence, however, what a lot of people don't consider is that MACD will also show you momentum. And the way you spot momentum is the same way you spot your divergence. Namely, you see whether your histogram is building or whether it's fading. So at this point, the histogram was building ever so slightly, and that would encourage you, if you're in this downtrend, to perhaps even hold on to the trade a little bit longer. When the histogram begins to turn, however, that shows you a break in the momentum, and that may be the time for you to start to bring in your stops a little bit. So if you were in this downtrend down here, it looks like it's very, very slight, but somewhere around here, the momentum starts to tail off. Let's see if I can make that a little bit bigger for you so you can see it a little plainer. So you can see the MACD begins to crest, and right about here, it starts to start moving the other way. Well, if you were in this trade, that would kind of coincide with these bars right here, wouldn't it? Now you understand why very often, if I'm in a trade, let's say we took this number 2 signal, we're short from here, our initial stops are up here, and as the market moves lower, I get my trade to a break even, and now it's like, where do I place my stops? Well, if I'm following MACD, I can see, okay, well, the momentum's starting to fade. Maybe I should bring my stops in. And this is very often why I will use a candle that has a wick on it, because that enables me to keep my stops a little bit tighter, but it also, I start to pick up on the fading momentum. So at this point, when the MACD is really starting to tail off, I can start to be a little bit more aggressive with my stops and maybe maximize the profitability of that move. So MACD can be pretty helpful that way as well. Like I said, divergence, and a lot of people don't take into account the momentum factor of the MACD. A lot of times you will see MACD momentum building, which will just reinforce signals. Like, okay, here for instance, and we may be a little bit early on this, but if you compare the peak back here to the current peak that's forming, it's got a bit of a downward slope to it, doesn't it? So that kind of confirms that we still have bearish momentum in the market, therefore giving a little bit more reliability maybe to this number 3 signal. And so here now we have the opportunity to get short. So we're in here, initial stops probably up here somewhere, and our profit target somewhere down here. And that's kind of based on the building momentum. Sorry about that. Had a little coughing fit. Now, like I said, a lot of people will just simply buy or sell the MACD at these crossover points. That leaves them with an always in type strategy. Most people, however, prefer to have some sort of confirmation, like this number 2 signal or one of the other signals on the Raptor. By the way, when you start to see the momentum shift like this again, that can be an excuse, just going back here to our number 3 signal that we may have taken. While it's occurring, this would be a good time to demonstrate it. Okay, so we're looking at the number 3 signal. Oh, where was it? Right here. Number 3 signal. And we're saying, okay, it looks like momentum is building. Maybe we will try to get short on that. And then when the momentum begins to fade a little bit, you see how we crossed over the 0 line and how our MACD crossed here as well. That gives us an excuse to start bringing our stops up one more time. So you can watch your MACD again now for momentum. And when it's hovering around the 0 line like this, it's really just a little bit of a mess. But I will show you how you can deal with that. All right, so as I was saying, the traditional way to follow MACD is just to trade the crossover of the MACD or the coinciding crossover of the zero line. So this will leave you in a always in type situation. So the market trades above here, you're long. If it trades below here, you're short. It's all well and good until you start to see the market trade too many times. Now, an easy solution to that is when your MACD crosses, is you highlight that cross with the bar that made that signal. So here we are. This is actually a good instance. We've got the market flip-flopping back and forth all the time. And what you could do is you can use these crossover points and highlight the bars associated with them as your entry points. So up here, for instance, where the market got bullish on the MACD for just a bar or two, you could say, all right, I'll look at that number 2 signal, but I'll only take it if it breaches this bar, which is associated with that little hiccup right there. Likewise, when we crest below here and MACD starts to back off, you can say, all right, I'll short, but only if the MACD, or pardon me, if price exceeds the MACD associated with that bar. And likewise, here we go again. We got that little hiccup in the MACD, and you can say, all right, I will buy that number 2 signal, but only if it gets above the high of that bar. I'm sure many of you are already beginning to recognize this as a second push signal opportunity, which is exactly what it is. So the MACD is showing us when the market is sideways, and rather than just trade it long or short, we can use those regions to confirm that it's actually safe to enter the market. So the MACD and the second push are really the same thing. And you can see here now from our number 3 signal that was back here, we came down and we've hit our profit objective. And we should have been able to get a profit out of that trade, even though the market was a little bit reluctant. All right. Now, another interesting thing with the MACD is when the market is in trend. Gotta find a decent opportunity here. When the market looks like it's trending. Well, here, let's go with this. That's a fairly decent looking trend. Okay, when the market is trending, it's going to have tendency to pull back, and I'm trying to find a little bit of a longer trend just to make the illustration a little bit more clear. The market's kind of been in a bit of a sideways range, at least today it has. Oh, brother. Okay, here we go. This will work. Okay, so the market seems to have established a bit of a trend. Your MACD has crossed, so we're going to be a little bit more bearish. If you miss the first opportunity, you're always going to be on the lookout for another opportunity to try to get into the market. Timing these subsequent opportunities can be really tricky. unless you follow the MACD's zero line. So what we're looking at now is we're going to be looking at the histogram here a little bit. So we have the MACD cross. The histogram crosses. We get a number 3 signal. We're looking at this and we're saying, oh dear, I don't know if I want to get into that trade. So we pass on the trade and the market starts to head lower. It's like, oh, why didn't I take advantage of that trade? Well, it's not too late, because what will happen with the market momentum is that, excuse me a sec, the market will have a tendency to pull back toward the zero line. When it pulls back toward the zero line, you can be on the lookout for a bounce. A bounce off of the zero line would be an indication that the market is going to continue in the direction of the trend. It's kind of like that renewed momentum. So here we are with the Raptor, and it looks like we're going to get a follow-up signal. There now is the follow-up signal, and there is the bounce off of the zero line on the MACD. Now you can do it with your MACD lines as well when they intersect and they bounce, but it tends to be a little bit easier to see on the histogram. Note 2, oh, hold on, somebody's, okay, 1 second here. Somebody's trying to Skype me. And with the new Skype, how the heck do I hang up? Have I told you guys how much I hate the new Skype? Why can't they just leave things when they work? All right, sorry about that. All right, so I was talking about this number 3 signal. You're looking at the market, you're thinking, oh, you know, all this candy striping going on, the market is locked and we're going to get a number 3 signal. It's not going to work out. Your MACD crosses, your histogram crosses over the zero line, and then the market starts to move and you say, oh no, I missed my opportunity. Well, no, not really. You're going to look for the MACD to move back toward the zero line and then continue in the direction of the trend. And you're going to look for a signal that you can use to enter. Now, this is important. You just don't want to buy because or sell because the MACD goes a bar or two in your favor. You do want to see a signal. You do want to see prices exceeding this MACD point, similar to what I was just showing you. So these zero line pullbacks and bounces can be a very good opportunity to get yourself back into the trend if a new trend is in fact developing. And you can see in this case, it worked out quite nicely. Gave you that second opportunity to get in, and the timing was perfect, using that zero line as a trigger point. So keeping a lookout on your MACD histogram and waiting for the trend to resume can be a great opportunity to try to get back into the market when a trend is established. Okay, what about those times that we don't have trends? What about those times when the market is just dead sideways. And your MACD will be flip-flopping all over the place. Prices are flip-flopping all over the place, and you just can't seem to make heads nor tails out of the marketplace. What do? Well, the easiest thing to do, as far as MACD is concerned, is to find your extreme point. So here we have, and you're going to go with your latest extreme points, not the stale ones, but probably the more recent ones. Okay, so this low right here is lower than this low. It's lower than this low. It's not quite lower than this low, but what I'm going to show you is that because the MACD kind of shows you an extreme low right here, and you can use your line for this as well. Sometimes it's easier to see this on the line than it is to see on the histogram. But we're going to link this extreme low with the same price. Now we're going to look at the extreme highs. So we've got highs here, we've got highs here, we've got highs here. And it's the same idea. You want to take the highest point. And it looks like this one is probably it. And we're going to link it with a price. We're going to look at when the MACD exceeds these zones. I need to draw that a little better. Okay, so these now are our zones. And these are the prices that have to be exceeded in order for the trend to resume. Okay, so price broke down here. The MACD is still holding. Okay, now we're starting to make that swing lower. And we're still chopping about a little bit. And note the extreme price, or the extreme on the MACD still seems to be holding. Oh, no, sorry folks, I did that wrong. It's been a while since I used MACD. Excuse me. Okay, it's the MACD highlights the extreme price, and we're looking for that price to be violated, not the MACD. The MACD gives us the zero line bounce. Sorry. Okay, so let me just refresh that. If the market is sideways, if the market has a whole lot of candy striping going on, you can use your MACD to highlight your extreme prices. And you could even bracket these with an OCO order, I suppose. The idea being, once the price is broken, then the trend will resume. Okay. Like I said, sorry. It's been a little while since I've been using my MACD, but there you go. So price is sideways. You use your MACD extreme points to highlight the price associated with those extreme points. And then once the price breaks, now you can be on the lookout for your selling or buying opportunity, because price broke here to the short side. And then if you miss that opportunity, then you can look for the zero line pullback, which is going to occur right here now. There we go. You can look for that zero line pullback as your secondary opportunity to get back into the trend. All right, so you can see MACD can be a pretty useful little indicator. I think it's important that you take these types of things and you always translate them back to what's happening on your chart. It's so difficult to trade just an indicator blindly. So here, once again, we got a lot of candy striping going on. If we did a little MACD reconnaissance and we said, okay, here is the extreme swings on the MACD. Here is the price associated with those swings. And then here are the highs. Here is the price associated with those highs. If we get a break above or below those, then we're going to be looking for our buying or selling opportunities. But you can see price broke. We did not get a signal. Remember, it's important that we're going to follow up with a signal. We didn't get a signal, and then the market starts to head the other way, kind of reinforcing the fact that the market is sideways. But our MACD getting a little bit bullish at this point. And that kind of opens us up to the opportunity of a possible buy, right? If the MACD is a little bit more bullish, I may be less inclined to take a number 3 signal to sell. All right, now the MACD has gone bullish. It's come back to the 0 line, so I'm going to look for evidence that maybe it's going to continue higher. Oh, and there we go. And here now is our number 2 signal. Did not print as a number 2 signal because it's probably too far removed. The retest is too far removed from this low, but it is a number 2 signal. Right, so there now is an opportunity to get long, and your MACD is kind of confirming what you're seeing. Got a little bit of heat on the trade as it comes back here now toward the 0 line. And again, you could use your, anytime the MACD is flip-flopping around the 0 line, you could use your extreme price as a guide. So this is where the MACD made the extreme. There's the price that needs to be violated before you start to get bullish. Okay, the price is broken. Do we get a signal? Oh no, they ran away. But you can see the premise still worked. If you took advantage of that number 2 signal down there, you would have had the opportunity to be in the trade. Otherwise, now we would be sitting on the sidelines. All right, class, would I be more bullish or bearish at this point relative to my MACD? See if you guys have been paying attention or just humoring me. Yeah, okay. Thanks, Mark and Dan. Yes, bearish. We would be more bearish. We would be open to these number 2 signals as they develop because the MACD is showing us that perhaps the momentum has shifted. Yeah, okay, and Frank chiming in too. So at this point, we would be looking for the market to head a little bit lower. And there they go. Now, as with all indicators, it's not going to be right 100% of the time, but it does make for some very interesting confirmations. One last thing, well, it's not really the last thing, but one other thing you can do with your MACD when you suspect that you have a trend is you can look for your MACD pullbacks. They're going to look like this. Right? The MACD is going to pull back, and you're going to look for a break of that little pullback line as an excuse to try to get back with the trend. So if you look at this and you say, oh, maybe the market's in a downtrend at this point, you can start to plot your MACD pullback. And then if the momentum shifts again and takes out the the trend line. Once again, you'll pair that with a signal and use that as an opportunity to get into the market. Okay, we're back at the 0 line. Let's see now whether we get the signal to short. And this is where, you know, things like early cloud crossovers come into play on the Raptor. Okay, let's just see how that plays out. Okay, so we're getting a little bit of a bounce back off of the 0 line. All right, here now the signal. So this is an early cloud crossover signal. So we could look to short. Oh, here, actually, why don't we get her going? So we're going to short. Just going to make a note of my stop loss and get it out of the way. All right, so we're short. I'll bring my stop loss back in, and my MACD is gaining momentum. That's good. If I see the momentum start to shift again, let's say it crests at this point, well, then I would have some divergence, wouldn't I? Now, again, you don't need to panic off of the first divergence, but it may say to you, okay, well, all right, there's some divergence. Maybe I'll bring my stop loss in a little bit more. Back here now to the 0 line. Still got another trend line to breach. Okay, so it looks like we're getting perhaps another little bounce off of the 0 line. All right, and down we go and find our profit target. Hooray for us. So, you know, it worked pretty well. If you're struggling with trying to stay out of the chop, if you're struggling with, gee, should I trust that number 2 signal, or how much confidence can I have in that number 3 signal? You know, maybe something like the MACD can help you out. Like I said, MACD is a very, very reliable indicator because it tells you what has happened in the past. But it can also be helpful to confirm what's going on in the future. I like the MACD because it is more momentum based. So, excuse me. So it does tend to show you what is happening with the market momentum, whether momentum is building or whether it's fading, and you know, then you can kind of make your decisions accordingly. People are always interested in tweaking their settings. And if you're going to tweak your settings, that's fine. The thing you need to remember, however, is that your settings need to change. What I mean by this is too many people will not get enough of a difference between the fast and slow moving average lines. So what they'll do is they'll say, okay, well, I'll go with a 20 and a 55. Well, you've still maintained that relationship that you have between a 12 and a 26. Or they'll say, I'll watch a 13 and a 34. Okay, it's still going to plot the same as your 12 and 26. So if you're going to play with your MACD and try to make it more responsive for whatever market you're trading, um, you have to break away from the ratio relationship that exists between the 12 and the 26. You will obviously produce different signals with a 13 and a 34, but the crossovers, if you compare the crossovers, they're going to be almost exact to your 12 and 26. So I tend to stay with the defaults unless I have good reason to change them. There was a while years ago where I was following MACD and I had a very aggressive MACD, and I think it was a 5 and a 13 if I remember right. But what I was looking at is I was looking at the MACD to crest. And when it crested, I would use those crests as my buying or selling opportunities. Now, it does not work so well on a mean wrinkle style bar because of the charting style, but it does work better on a time-based chart following those crests. Bear with me here just a second. If you've been trying to take notes and you've fallen behind, this is, oh shoot, where did she put it? I've actually did a little MACD trading manual, if I could just find where the webmaster has stashed it. Well, for crying out loud. That's the thing with webmasters. Well, I found the page, but I can't find. All right. Here, I'll put it in the window. And again, this isn't a sales pitch or anything, but if you're having trouble keeping up, you can always review the video online, or there's a little manual there. I've got to get after the webmaster and get that. I'm not sure why that's not activated. Okay, she's always online, so. All right, that pretty much sums up the best ways I know how to use MACD. If anybody has any other tips or tricks, then by all means share away. Otherwise, we still have some time here, so I'm going to take the opportunity to throw the MACD now on the other birds. And we can see how it works out on those. Now I realize with our little Rabbit Hole Friday experiment that you may be learning a lot of stuff, and the objective you need to keep in mind with trading is to make money. It's not to tweak your system. That's not the game. That game doesn't pay. You can make money even without MACD on your chart. But, if you find it helpful, then by all means, go with it. All right, let's start here now with the hawk. The hawk, of course, developing signals a little bit faster, so you're going to get a lot of this kind of stuff going on. A lot of time the MACD hovering around the 0 line. But that's okay, because as you've seen, if the MACD just keeps bouncing back and forth around the 0 line, you can take those bouncing areas and you can highlight those prices associated with that, and you can look for breaches of that price and then for a follow-up signal. Now here the follow-up signal came, but it didn't engage. So even though the MACD looked like it was following through, there was no follow through on price. Wow, and it's kind of unfolding a little bit quickly here at this point, but the MACD a little bit more bullish. So once again, that opens you up to a buy signal, should we get it. Here was a nice smooth crossover of the MACD, and your first micro-macro cross came shortly thereafter. No problem on that one. This one, here's a first micro-macro cross to sell, but the MACD is bullish. The signal worked out. The MACD, however, wasn't in line with that. So I don't know, maybe the MACD, let's go back here a little bit further. Okay, that's middle of the night. Let's go here to yesterday's session. Oh, serious chop going on. But once again, if the market is choppy, there's your extreme price on your MACD. So you can say, okay, price is here on the low side. And where's the, looks like that might be the high point on this side. So you may say, all right, so long as price is in between these 2 points, we'll avoid it. Okay, there's the bullish break. Let's see if we get a first micro-macro cross signal now. All right, so there's our signal to buy. The MACD highlighted where the market was congested. So let's see if this signal works out. There's the signal to buy. Now with the scalp, we're only looking for $50 on the trade. So the target, usually we're in and out before there's too much chance for the market to retreat. But let's say we set up our trade this way. And yeah, there we go. Okay, so MACD worked all right in that instance. You'd have to follow it for a while to see if you find it helpful. We'll take a look at a couple more examples. Let me scroll back here to another day. Wow. You know, it's funny, the market is in such a strong trend, and look at how the MACD keeps waffling. But again, if you missed your opportunity, let's say you got put off because of this yellow bar, and you said, no, I'm not going to take the macro pullback, it's a yellow bar, and then the market continues higher. Here, let's roll this over so we can pretend it's real time. So this is what it looks like when the signal is forming. You're expecting a macro pullback. And the market comes down, turns into a yellow bar. And so you say, oh, nuts, I missed the trade. It's on a yellow bar. And then the market starts to go higher again. Well, at this point, you could be getting a little bit frustrated. Even though this is another first micro macro cross, you could say, okay, first micro macro cross, MACD is in sync, I'll take it. But let's say you didn't take that. What you could be on the lookout for is now a zero line pullback. So you could be looking for a chance. There we go, MACD back now toward the zero line. And you can be looking for the MACD to resume the trend. And there it is. There's the trend resumption. There's your signal now. And there's your second chance to get on board. And of course, the market has a little bit more follow through. So it can work for you that way as well. I think, you know, if you used it to confirm your signal, even if it means missing out on the odd signal, like this one back here, where we got a very solid first micro macro cross lower, but for whatever reason, the MACD was bullish. So even if you end up missing out on the odd signal, that's not necessarily a bad thing, so long as you still end up on the right side of the trade for most of your signals. All right, so that's the MACD now on the hawk. Let's take a look at the MACD now on the Falcon. This is going to be very, very similar to what's going on with the Raptor, because of course the Falcon is the primary signal generation system for the Raptor. And once more, I think I would use it more or less as a confirmation tool. So here we have the MACD crossing. So now I'm going to be on the alert for a buy signal. Here's my trend change signal. MACD is still bullish. There's my trend change signal. So I'll go ahead and I'll buy. And you can see there was some very decent follow through on that. Here we had an early trend change signal. So there's a chance to get on board with an early trend change signal because your MACD is already decidedly bearish. There's no question the MACD thinks the market is bearish. Prices haven't caught up yet. So there's a little bit of an advance notice, if you will, that the momentum may be shifting. You get your early trend change signal. So rather than wait for the proper trend change signal, which occurs back here and has the added disadvantage of already showing maybe some divergence, maybe just a zero line pullback. But rather than waiting for this signal, the MACD already confirming that, yeah, we're in a downtrend. Go ahead, take that early trend change signal. Here we have a proper trend change signal, but the market seeming a little bit constipated, right? Where MACD is flipping all around the zero line. So once more, you could use your extreme points to highlight the prices that need to be violated in order for you to get long or short. Come on. Okay, I got it. Thank goodness my webmaster never sleeps. There is the link to the MACD guide if you want it, written down. Otherwise, like I said, you have the video that you can review. Sorry, it's been a long week. You can review and you can also make yourself notes. I do go over a few other things in the little MACD manual. That's what it looks like right there. So a little shameless promotional plug. All right, so we've got a market that's a little bit sideways. We've got actually a late filter entry signal and a trend change signal at the same time. And you may be wondering, well, can I trust this signal? Should I take it? Well, your MACD certainly says that the market is bullish. Here is your extreme high price that needs to be broken according to the MACD. That's where the extreme high is. And the market breaks and you get a second chance at it with your second push entry now, and away you go. So that worked out pretty well. Let's see what else we can do. This is interesting here. The MACD going bullish. Excuse me. The MACD going bullish, but price not really following up just yet. Taking a whole lot of heat on that. I would have expected a little bit more out of that, but maybe the market just a little bit busy. Big swing up, big swing down, both confirmed by the MACD. So it would have worked out for you pretty well that way. And depending how you manage these, so here's the trend change signal right here. So this is where we're looking to get short. And if you had also taken the buy signal out of the open, where's the buy signal right there? You could be in pretty good shape so far, especially if you were using your MACD to manage your trades. You might have been able to maximize some of the profitability on these swings, on these big moves. Your day could essentially be done, and you'd only be about 15 minutes into your day. All right, here we are waffling again, going back and forth, back and forth. Now, I would probably, yeah, this looks like my extreme low right here. So I would highlight that price. Well, it's right on the median line. And then here's my high price. So we broke this little swing high right there. That's associated with that MACD. And so now I would be bullish again. I would be looking for a buy opportunity. Let's take a look, last but not least, let's take a look here at the Eagle. And the Eagle, given the nature of the tool, the swings are going to be broader. Um, hold on a second here. Mark says there's something wrong with the link. Yeah, it's all right, Mark. Mark says, it's okay, I just answered my own question. All right, back here now to the Eagle. And I would use the Eagle again as a confirmation tool. So your MACD bias at this point is bullish, so I would be more open to a buy opportunity. Funny thing is, we got the warning dot. This should have been a trend change signal right here, but we didn't get it. Wow, that's kind of crazy. Here, the MACD is decidedly bearish. We got a trend change signal. It had some follow through to it, not really impressive. I think if you're going to follow MACD on the Eagle, you need to give a little bit more leeway when it's moving back and forth here around your zero line. But it could be a great confirmation for the hard edge bounces. Let's see if we can find one. First, we need to find something resembling a trend. Isn't that odd? Here was a very solid trend change signal, and yet on the MACD, the Eagle was decidedly bullish. Well, I guess for the most part, maybe the reason the indicator keeps waffling is prices haven't really moved much outside of this range, have they? Kind of been stuck around the whole 6,900, 6,850 zone for a while now. Okay, let's go back here a little bit. Market opens are always interesting because that's where the market usually has a little bit more giddy up. Okay, so prior to the market open, MACD got bearish. And that certainly followed through after the market opened up. Let's go back here to another day. MACD was bearish. We got a sell signal shortly after the open. Took serious heat on it. In fact, the MACD got bullish. Yeah, that's odd, isn't it? The MACD seemed to work just fine certainly on the Falcon and the Raptor. Not bad on the Hawk. Certainly, you could use it as a filter, but for some reason, I'm not liking it all that much on the Eagle. Unless you're going to use it more in the traditional MACD sense, when your lines cross, you just take the next buy signal. Your lines cross, you take the next sell signal. Maybe that way it would work better. MACD crosses bullish here. Your next buy signal is right here. That certainly worked out. This one, not so much. Your lines cross. Your next buy signal is right here. That one was short-lived. Your lines cross. Your next signal short is right here. That was not bad. Could have made a little bit of money on that. I don't know. You'd have to review it a little bit. Like I said, this is the problem with introducing Rabbit Hole Fridays, is that I don't want you to get detracted from learning your tool. You can see that we had some very solid signals here on the Eagle, and if you were relying on your MACD, you may have actually missed out on some of them. But here the MACD crosses. There's your first sell signal. Gave you some heat, but eventually headed lower. MACD crosses. There's your first buy signal. That certainly worked out. I'll leave it to you to play with it for a little while. Yes, like Mark says, the disclaimer, always back test before you go live. Do yourself a favor. Test and then test it some more. Take your profit when you have it. That's always good advice. And don't overtrade. All right, now Monday is still a long ways away. We're just going into the weekend, but we are under a heavy snowfall warning here on the West Coast. And not that that's a big deal, but what tends to happen, because our snow tends to be heavy and wet, we may lose power. Last time the snow was accompanied with very strong winds, sub-hurricane winds, and some of our friends were without power for 4 days. I don't expect that to happen, but if for whatever reason you log in on Monday morning and I'm not here, you might think, well, Eric might be shoveling out. Maybe he lost some power. All right. Have yourselves a wonderful weekend, folks. And I hope I answered some of your questions about MACD. I have to say, I don't mind it on the Raptor or the Falcon. Okay on the Hawk, and I'm not sure what I would do with it on the Eagle, but maybe you can figure something out. And you can let me know what you thought of Rabbit Hole Fridays. We'll try it again next week. It doesn't look like, looking back on the chart today, we missed all that many opportunities. Have yourselves a wonderful weekend. I will see you on Monday. Bye for now.